Good evening, everybody. The normal Pittsburgh winter evening here tonight. Cold, a little bit of snow on the ground, but a lot of it melted today. Roger, don't give up. Remember, we're only seeing what's happening on a knee-jerk reaction, and I'll show what usually happens. So this is going to be kind of that type of evening. Is not only are we going to identify, or people are still wanting to know more details about our rare program, which is not anything difficult. It's basically taking all the common sense elements that we know in candlesticks and applying it to two factors right now. And for those that are, what is it, an accurism? RARE stands for Research Analysis Reverse Engineering. Now, for quite a few years, people have been saying, well, don't you pay attention to fundamentals and using candlesticks? And the answer was no, because the research is already built into the candlestick signals themselves. Everybody's decision, based upon what their research is telling them, is what affects their buying and selling. So what we're doing is we're putting this into, right now it's two relevant aspects. The first thing that we set this up for was, you've got companies like Tesla, that's up 700%. Jim, can you help Sally get her sound? Let's see. All right, so we got Tesla up 700%. You've got NIO up over 1,000%. Now, the question is, should you be investing in these right now? That's now more of a question on, are these charts working as far as candlesticks are concerned? What we want to use candlestick, the RARE program, is to find where things have changed in a company, especially in a company that 80 degrees, oh man, a company that might be in a what I would call a sector that at this time might not have been very well defined as the as being a hot sector, a strong sector. But now we're going to do kind of reverse engineering. We know that I'll call it electric vehicles. That includes fuel cells. That includes lithium battery miners and manufacturers. That whole sector, and I've repeated this or mentioned this in the members session last Tuesday, that whole sector has had explosive growth. Now, explosive growth meaning 2 years ago when Elon Musk was saying he was going to produce electric cars, that seemed like a little bit of futuristic, the rich person's method of showing that they're going to be economic or environmentally concerned. But as we can see in the prices of some of these stocks, that 1,000% gain isn't something that the investors are saying, well, this is just going to be a whim. This is probably here to stay. I think as of recently, the alternative cars have got 1% of the total automobile market. But the acceptance factor of electric vehicles, whether they're hybrids or straight out battery Tesla automobiles, it's getting more and more accepted that this is probably what's going to be happening. Is there a list of electric stock symbols that you have identified? Yes, Kate, and I'm trying to figure out how I can get that to everybody. I've got about 50 of them. The 50 that are kind of the, what do I want to say, the kind of not established, meaning some of them have only been around for 6 months to a year, but the ones that are being well followed. There's probably another 80 that look like they're startups, but they're still in the drop an Excel spreadsheet. Brad, that's a good idea. I think I've got one somewhere. Yes, but Jay, that's the list too. The ETFs are all on this list. Yeah, but I can do that. I'll figure out how to get that done. Anyways, but look at that, 1,000% gain. And things like lithium. I mean, we've just made huge profits with these, not by happenstance that we said, oh, this is going to be a good industry. It was backwards. It was showing us good breakout patterns, and then start going back and saying, all right, what are these companies? They're in the electronic or electric vehicle area, either lithium, as I say, fuel cells. So here's the reverse engineering. There are companies right now in the electric car area or electric vehicle area that are working on technology that right now is leapfrogging over each other. And at any given time, somebody can come out with something that puts them a little bit ahead of everybody else and gives them a strong run. So rhetorically, are there going to be companies out there that could produce another 1,000% upside potential? Probably not. Shouldn't even say probably not. What we're essentially looking for is the ones that have that potential. If they're up 30%, 60%, 200%, 400%, who cares? What we're looking for right now are things that are telling us there is a breakout alert. So the definition of rare is if we see something breaking out, first thing we want to do is go find why that is happening. What's the news announcement? And is that going to be relevant for further upside potential? For example, in the past couple of weeks, I think a while back, Elon Musk said that his Model S right now gets 420 miles range on a charge. And 2 years ago, it was 120 miles. That seemed a little bit testy if you work more than 60 miles from the house. Now you're at 420. He said that he could probably get it up pretty soon to 625. NIO came out about a week or two ago and said they've got batteries now that are going to take them to 625. So that's the type of technology increases we're seeing. For all we know, 4 weeks from now, somebody else comes out and says, our battery we've developed will get you 800 miles. Or somebody comes out and says, our 1,200-pound lithium battery, we've got it reduced down to 400 pounds. So there's going to be things that dramatically improve as far as technology and making electric cars better and maybe even cheaper. And that sounds a little bit unusual. Brent, that's also included. Fuel cell, plug, cars that are companies that are oriented toward the hydrogen technology right now. And Seuss, I've got a list. I think right now the list is at 50. I'll try to get out to everybody somehow. And with that, oh, as I said, there's another probably at least 100 that are still in the pink sheets. But if somebody comes out with an announcement that can put them ahead and create, so our reverse engineering is, if we see something like this, WWR has some lithium mines, I think, but you can go back and say, all right, what's breaking it out and when do we start buying it? And this is where candlestick analysis helps get into positions at the correct time. There are positions or breakouts that tell you, up a big spike up, we don't want to be buying yet because today it opened and traded down here. But very simple strategies using the candlestick charts tells us we do want to be buying this if it comes back up through this level. So this is a case where if we see a breakout and we see that the news is worthy that it's probably going to add more, we can set up or at least use the candlestick charts to say, all right, there's our alert, fry pan bottom breakout, gap up, don't want to buy here, don't want to buy here, but I'm buying here because there's my double doji setup that put me in the right position at the right time. Today it was SPI. Fry pan bottom, gap up yesterday, and confirmation there's more upside. Now the reason I call this 2 plus 2 is if we can do our reverse engineering and find out there's a good reason why this popped up and it's probably going to be moving for a while, and we can also analyze that it came out of a pattern that we know what should be the results coming out of a pattern is a big breakout. That just gives us that extra oomph to say, all right, this one's popping good. What keeps most investors from investing in a stock that's already starting to move? Boy, I don't want to buy a stock that's already up 3, 5, 10, 15, 20, 40%. Marshall, yes. It's a wee little teeny island reversal, but you could draw a line or draw a circle all the way around here and not touch anything. So there's your fry pan bottom, breakout, island reversal. The probabilities are pretty strong that not only are you going to be in an uptrend, but you got the capabilities of being in a strong uptrend. So that's how we're using it to identify that if there's 50 to 150 companies that are related to the alternative energy vehicles, we've got that reverse analysis or reverse engineering to say, up, they announced something coming out of a pattern, and that announcement is likely to keep them going in the wrong, or yeah, in the wrong direction of reading. Yeah. LG, no. That's the wrong method for investing in candlesticks. Wait for a pullback and hold support, then buy. A lot of people say, oh, this is moving good, I'm going to wait for it to pull back. The reason we're buying it in the first place is because we want to see that there's strong bullish sentiment there. Now, sometimes you have to wait to see if the consolidation is over and the buying starts. This is parabolic. Well, this could be parabolic. Notice how it was parabolic over here. Now, whatever they announced, this is where when we see something like this, I usually ask the chat room, what's the news on SPI? And if it's something where they've announced better technology, yeah, you can start going after it with a little bit more confidence because it's still creating a pattern. So our first reason for the reverse engineering is because technology in the alternative energy vehicles is leapfrogging on itself. And right now, 1% of the market is electric cars. And 2 years ago, I would have said, Al, this is still a lot of far-fetched stuff, probably just play stuff. Well, now we know there's cars out on the market. I think Tesla just missed the 500,000 mark this year by a few thousand. But that means there's close to 500,000 electronic vehicles or electric vehicles out there on the roads. Now, advanced in one area may be detrimental to another area. So that's why you have to constantly use the candlestick charts to tell you when selling is occurring. For example, if a car has a range of 120 miles, that would make a charging station relevant, like in Blink or some of these others, or charging stations. If the batteries now can make a car move a million or 1,000 miles on a charge, maybe your charging stations aren't that relevant anymore. They're not where you go recharge your car. They're just emergency places that if you've driven close to 1,000 miles and you still have some place to go. So that can affect different markets. I think it is your mic or internet. Your voice goes away along with the little sound indicators by your pictures. Anybody else having problems with the sound? Usually what happens is if your sound is not good, Deborah, go up to the red X up on your top right, log off, and then log back in. That usually gives you a better connection. All right. Whoops, scrolling way down here. Don't you think there will be as many charging stations as gas stations? CB, what I think doesn't mean a hill of beans. Again, if the cars now get 625 miles to a charge, and a majority of your vehicles are taken out of the garage in the morning and back in the garage in the evening, a little vibration, and maybe I'm just nervous. Difference between okay. I forgot what I was saying. I was reading. Oh, the difference. The lithium batteries is it's obviously made out of lithium. The hydrogen fuel cells are, I think, almost taking hydrogen out of the air, converting the hydrogen into power, and then releasing everything back into the air. John, that's the next point we're making with the rare analysis. Political effects. Now, I always think I'm such a clever analyst to think, oh, if this is happening, then this sector should be acting well. Most of the time I'm wrong. But the way I can confirm whether I'm thinking right or not is, it might be water too, that's true, is if I think that the new administration is probably going to, well, not probably, is going to be much more oriented toward green energy. That means the solar companies are probably going to be acting well. But we can also immediately see that the Biden administration doesn't seem to be acting too favorable to the oil companies. So those we can immediately see are probably things that you might be considering shorting. Again, this is not rocket science. This is just taking the information that we see in specific stocks. Now, the oil sector looks weak, not because AEO looks weak, but if you can see the chart on Occidental, Apache, ExxonMobil, ConocoPhillips, if they're all acting weak, it's not that there's something wrong with one company. It means the whole sector is probably being sold across the board. So anyways, here's the concept with RARE, is that it provides now an alert to tell us something might be happening pretty strong in a particular company in a strong sector. Again, why alternative energy vehicles? Because it's got two things going for it right now. It's becoming much more consumer accepted that electric vehicles and or hybrids are going to take up, are more acceptable because of the clean energy, and two, that technology is moving so rapidly in that area because just some simple details such as electric motor has very few moving parts. Obviously, a gasoline engine has quite a few moving parts. And I read an article that said your average gas engine will last 150, 200,000 miles. Your average electric motor can last 1 million miles. So a lot less maintenance. So there's going to be great advantages of the technology that's being improved. Yes, Tesla is using lithium batteries. If I'm not mistaken, and again, I'm trying to gather a bunch of information all within a short period of time, I think the lithium batteries in a Tesla automobile is approximately 1,200 pounds. The difference is the 1,200 pounds can be scattered or spread out on the base, in the base of the car. It's not all one heavy weight right at the front end. Actually, that guru who said oil prices should go up was one of the men who you had last time. Well, I'm thinking that crude oil prices might be going up a little bit right now because they're clamping down on, I guess, moving it around. Are you building a special barn? That's true. Yeah, never. Yeah, so there's other sectors, Catherine, that can be watched and apply the RARE analysis to it. Which companies in that sector is coming up with the better innovations? Okay, so why alternative vehicles? Because of the advancement in technology. Why biotech? Same thing. So essentially, all we're doing is a very simple process that we're looking to see who's, and the alerts will be very apparent. On a big price move, that's telling you something. So now we'll just go back and then analyze, if this is in a strong sector and it's had a big breakout move, let's see why, and let's see if that information or what they announced is going to be relevant for a while. So with that, I know we've got a lot of non-members in here, and so this is what our promo is right now. I don't know whether this is for 1 week or 2 weeks, but we're going to give everybody a free 2-week guest pass to our chat rooms and our our analysis and stock picks. We're calling this kind of a free sample. And the reason we're calling it a free sample is, being shut in as we are, I recently read the history of H.J. Heinz, or the J.H. Heinz, from here in Pittsburgh, and he made his success because they were making a better product, and he would let people sample it, well, the grocers sample it, and then also, instead of putting in the normal green bottles that the color of glass was back then, where you couldn't see what was in it, and they said a lot of people's, well, this was horseradish that he was moving. He had a better quality horseradish because he didn't have filler, which sometimes other companies' fillers was even sawdust. And he put it in a clear glass so everybody could see that it was better. So if you kind of use the concept of candlestick analysis, there's nothing difficult about it. It's just common sense put into graphic depiction. So anyways, give us a try. I guess next week we're starting, I think it's for a 2-week. Abe's got 1 week up here, but I think it's for 2 weeks. Yeah, he came up with a better ketchup formula. Again, ketchup was kind of a runny, loose stuff. He made it a lot more quality. Yeah, we do have an options room. Okay, thank you, Suze. Well, I think it's a 2-week trial, LG. Yes, it was, yeah, back then you had to kind of cover up the taste. And so anyways, he was an interesting person. But so the free sample is based on, I think you'll like what you see, because it's not difficult stuff and it's just common sense stuff. So with that, let's go to some live charts, and we'll kind of go through what we're in and why we're in them. If I can find this. I don't know how close I got that, Jim. Oh, I will have to check with Abe to see if we've got the free sample of some sort of setup for the options room. Is this working right? All right, so how's that? Can make it a little bit smaller. Okay. Jim, is that okay? All right, I'll try to go through these relatively quickly because I've got a bunch of them. Oh, I can't unless I mean, I can make it smaller in this direction. Let's go through everything. As we can see, the market is still above the T line. So all we can do is assume to stay long as we're above the T line. Same scenario over here on the NASDAQ. Still steady uptrend, staying above the T line. Crude oil has been holding up well. If I could type it correctly. Well. That's not it. But you see it's kind of topping out here. So this is why the rare analysis of that we're starting to see selling in all the oils, Occidental, Apache, we used ELG as an example, ExxonMobil starting to sell off, so they're not looking good anymore. Phil, yes, you can make your chart bigger by the little icons up on that top row, either arrows pointing in or arrows pointing out. Okay, so here's some of the simple common sense. We recommended PAGS today. However, when it opened, notice what it did. It immediately started selling off. So that candle immediately started red. And what was it telling us? The buyers aren't there right now. So when would we buy? If they pulled back and then they came back up through the open, that would tell me the bulls were in control. This one kept us out of a trade. Henry, no, I think it's probably more the fact where they are starting to announce. Is that chart not changing? If your charts aren't changing, I'm with SPI. You're with SPI. Yeah, Bala, go up to the red X, top right, click on it, and then come right back in. Yeah, so right now we're on PAGS. Same scenario on DT today. It didn't get up to the point where we wanted to get in, and it sold off. So that would have kept us out of that trade. So not only do the charts show us when to get in, but they show us when not to get in. And we can use very simple analysis to say, all right, this one broke out, but it's right back here on the T-line. We know the T-line has a very high probability statistic. As long as you stay above the T-line, you're in an uptrend. If you start trading below the T-line, you want to close out the position. So the breakout situations are patterns like this, where you have a fry pan bottom breakout. Made this very easy to get into this one after the double doji. Kind of the same scenario over here where you had that breakout. Now you've had a pullback to the T-line, and now it's starting back up. Now, we had recommended, and we had even bought PGNE. So here is the thing that you can't ever project going into a position. This one did a perfect best friend signal off the 50 up through the T-line, consolidated today, but then they came out after hours with a new stock offering, and it's trading down here. We have to see what they do with it tomorrow. So there are going to be times when a trade doesn't work. But the important thing is using candlestick charts to know what to do with a trade that's not working. So tomorrow, if this opens down here, right here on the 50, better see it start coming back up to stay in it. Is bingo still a buy? Probably. But notice what happened here. When they announced a new offering, it pulled back. But what was the nature of that pullback? Very indecisive, number one. And number two, you stayed above the T-line. Where would I be buying if I was buying now? If it came back up through today's open. So pulling back to the T-line adds credibility that the bulls are still in control. We have been buying or getting ready to buy Valid Power because look at the kicker signal. The kicker signal is your strongest individual candlestick signal, and it bounced right off the T-line. So what type of pattern do we have setting up? A J-hook pattern. Wave 1, wave 3 should be that same magnitude. So having that ability, we have patterns that allow us to take advantage of human nature the way we know it's likely going to occur. Meaning, look at our doji after a strong up move right here at the breakout level. What do we know about this setup? If it opens positive, the doji rule, it's going to trade positive. And what's the magnitude of this candle? It's usually going to be this candle right here with the doji sandwiched in between. That's why we call it a doji sandwich. But that gives us the 2 plus 2 analysis. That if it opens positive, we know it's going to trade positive. If we know it's going to trade positive, likely that same magnitude, what's it tell us about our J-hook pattern breakout? More than likely that J-hook pattern breakout is in progress. So you have those type of setups like we saw in MAXN. Same scenario. Doji, if it broke positive, it broke this, or went positive, it broke this kind of resistance level. And we've been long in SPWR. Look at what happened here. Doji sandwich breaking out through this level right here. So again, this is not rocket science. This is just using the common practices or common aspects of human nature to get much better advantage of knowing when a price move is going to move in your direction right at the exact time. So look what happened here on this J-hook pattern. You can pretty much assume there was a resistance level right here. Now you have a J-hook pattern. What do we know about a J-hook pattern? Wave 1 and wave 3 are usually going to be the same. What's that tell us about the resistance level? It's not going to act as resistance. That's what gives you good breakout price moves. So a lot of people in the chat room have been long Pola, and right now there's no sell signals. But we do have different things that keep us from giving back our profits. Put a safety stop somewhere where it shouldn't be trading, like right back here in this range. And how long do you hold an uptrend? A lot of people say, well, shoot, I've got a profit. I'm going to take profits. Whoops, what do I want to do here? I want to get rid of that. So what happens here? What about distance from the T-line? That's why you want to be a little bit more attentive to where you are compared to the T-line. And that's very simple rule of the T-line. You can buy when you see a candlestick buy signal and stay long until you see a close back below the T-line. And you stay long as it stays above the T-line, with the caveat that the further away you move from the T-line, the higher the probability it's going to come back and test it. Let's see if I can find this example right here. Right here is the options. We had people in the options room, long the options, and then look what happened. What happened here? Started gapping up in the overbought condition, started moving away from the T-line, gapped up again. And so what is the basic analysis that the Japanese rice traders always profess? Where do most people buy? They buy exuberantly at the top. How do we know when to start taking profits? Well, if you're that far away from the T-line, the next step is you move to the 10-minute chart. So they were getting out of positions up here. And look what happened over the next half a day and a half. Where did it move back to? Right smack dab to the T-line. So that's because we can graphically see what normally happens in human nature. Oops, how far back did we go? Let's say, let me go through a few more. We've been in CBAT because they make batteries. They're staying above the T-line. And if this starts breaking to the upside, we can pretty much calculate where our next target is, the upward end of this channel. Why is that important? Well, if this was going to move up 12%, it's decent. But the fact that if they move from here to here, moving up 30%, that's a good place to have your money. Is it too late to buy fuzz? Probably not. Probably still in an uptrend. You stay with it as long as it stays above the T line. Now, Dollar General, that's not probably what you were looking at. You were probably looking at DQ. That's probably something that if you were holding, you hold it, but you wouldn't buy here. So LG, the questions you're asked is what most people ask. Oops, well, Shazam. Can you be buying plug here? Yes, you probably could. But the important factor is, somebody even asked today, can we be buying an MDM here? And the answer is you're in the overbought area. You're starting to move away from the T line. You've already moved up 200, 300%. The answer to that is, where should you have been buying? Maybe here, maybe here. So instead of running after something like this that is moving, you go find positions that are just starting. And anyways, we've got plenty that are just starting. Why did you hold CBAT this morning when it opened down below the T line and traded down? Only because it wasn't moving that far away out of the trading range, and the markets weren't selling off with any great enthusiasm. So what is the important factor of any candlestick signal? Where it opens and where it closes. Now, if this had closed down here, what did that do to our trajectory? And it made it pretty lousy to go on to something else. And that's pretty much what we kind of recommended today in clean energy. It was down here, and somebody was saying, should we sell it? And the answer was, if it closes below the T line, you sell it. Now, what do we need to do to stay long on this one? It better open positive and trade positive. That's true too. If you think of each position that you own as little green pieces of paper instead of a stock, most people stay with a position because they're in the position. Hold on to your individual ones. Most of the ones you're bringing up we're going to be looking at anyway. So I'm just trying to get through some of the... Now, here's one that's made us a lot of money. Except we closed it out yesterday because you had a gap up in the overbought condition. Look how far away you are from the T line, and they gapped it down. It was time to close out the position. However, what was the other aspect that told us we should be getting ready to buy this back? Because they haven't been able to close this below the T line. So what type of pattern do we have setting up? A J-hook pattern. So if this opens positive, you can start adding back again, because when it did this, we didn't know whether they were going here or whether they were going to support on the T line. No. Andrew, if a stock closes below the T line, we close it out. Because the probabilities of anything closing below the T line is telling you more than likely not acting strong. It is better to close it out and go find something like this. Now, lithium today closed below the T line. So what is our analysis of the T line on this chart? Well, the T-line's been a support level now for the 3, 4, 5 months. So what's our trading strategy tomorrow? Set to close just below the T-line. If it opens lower and trades lower, you close out the position. If it opens positive and trades positive, it's still telling us the T-line is acting as support. So why the difference? Because the longer the T-line acts as a support level, the more compelling you want to see selling up here. If you buy something, I'll have to find it. But if you bought something, I'll find one. Alvaro, if you buy something because it's just done a candlestick buy signal and told you that the bullish candle is telling you the bulls are in control, well, the next day it opens up and comes back down and closes more than halfway down the candle that told you the bulls were in control, the bears are still in control, you close it out. Lithium did have a bearish left-right combo, yes. But we've had sell signals before in this one. Now we just want to see if it's going to hold on to the T-line. Let's see. Blink is a good example where you should have probably closed this out. We closed out call positions here because it told us the probabilities were still in a downtrend. We held on to stock positions because it still seemed to be holding, this trend. So now we have a doji. You remember our doji rule makes it very simple. If this opens lower, they're still trading lower. We close out the position. If they open positive, they've hit the bottom of the trend channel and starting back up to the top. It could be a double top also. Or, if it opens positive, it could be a wedge formation for a while. But this fits into a different category because Blink has gone up from, I think we started buying it at 887, and we sold out some here, we bought some back here. Now we're just waiting to see if this uptrend stays in progress. Oh, so I did have lithium on here to show, that we might get ready to take some profits. Okay, and a couple more that we're in. Toughen. Basically, stay long. This is a very simple reason analysis of why you use the patterns. There's your fry pan bottom. This is what we call the classic pattern. Fry pan bottom, strong price move. J-hook pattern, setup. What's a prerequisite for a J-hook pattern? A strong price move. So if we took profits here or if we held on as long as it stayed above the T-line, look what started wave 3 right off the T-line. A morning star signal. Then they opened it positive. When it opened positive, what were all the pieces of information that make for a bullish trade visible? One, we had a morning star signal. It opened positive, confirming the morning star signal. 2, it was telling us the T-line was acting as support. And 3, it was telling us this little congestion area wasn't acting as resistance anymore. We could pretty much see we're now in wave 3. So even if you missed this move, you can pretty much calculate what the magnitude of this move will be, which is this right here. That's because human nature works the same way time after time. Now here's one. Oops. No. Where we had a pattern breakout. Best friend, where was the next target? The 200. And what happened there? It failed. What should we have seen today to stay in it? It needed to stay above the T-line. So probabilities told us close out the position. Now what are we still looking for? See if it's going to do a bobble breakout or a J-hook pattern. So even if we close it out, we don't take it off the watch list. We see if it's still running up. Tough and fooled me. Didn't think it had enough breakout and volume. You don't need volume. Volume doesn't mean a hill of beans. If nobody's willing to sell, a stock's going to go up pretty strong on low volume. We're not buying volume, we're buying price. And price is a function of graphically seeing what's going on in the charts. So a lot of people say, well, don't you want to see volume go up as the price goes up? If nobody's willing to sell, that price will go up on less volume. Now, the only time the volume becomes a added benefit is, let's say you see a bottom signal and there's a huge volume spike. That's a pretty good indication there's been a major change of ownership. Okay, let me get through some of these, or we'll be here until the cows come home again. Netties. Here's why you use 2 plus 2. Strong price move. There's your bearish kicker signal. Where was the next price move? Back to the T-line. Now what happened at the T-line? There's your best friend signal. If you cut the chart off right there, what did that tell you about the T-line? It was going to hold, and more than likely you'll have a J-hook pattern. What happened the next day? It confirmed. And so even on this day, we bought some calls because we thought it was going to be pretty strong here. When it closed here, gapping up and didn't sell off any, doing a doji, we bought some more calls. Why? Because if it opened positive, where was it going? It was going out through this level, which told us this move right here is likely to be the same move as this right here. This is what gives you a very clear playing field to tell you where the probabilities are, which trades are going to be working the best. Right here, I didn't move fast enough, but with it finishing as a doji, I was watching to buy it here, but as you can see, it probably sold off a little bit right at this level, went on to something else. But when it came back up through that level and started turning green, what type of signal could we anticipate? The doji sandwich. That would have been a good place to be buying calls, even on a day trade basis. See, we did blink. Apple. There's your morning star, your doji gap up and gap up. What type of pattern do we have? Probably wave 1, wave 2, wave 3 in Apple. Amazon also had that gap up. Now, got a little bit testy today because right there, it started failing. So what do you, if you were long Amazon, Mo, I will get to IPWR. It's on the top of one of the other lists. But I've got it. What did this tell us? They were failing at this level. So if this opens lower tomorrow, what do? You close out Amazon because that tells you you're still in the sideways channel. Move on to something else. NVIDIA. That had your kind of your doji gap up, and now it's broken out through this area, indicating there's probably, and your stochastics got a lot more upside in it, indicating there's probably more upside. Again, this one started off with kind of your best friend signal, doji gap up. And Tesla, you can see, is kind of running out of steam. So what is your criteria here if you're long Tesla? It better trade positive. If it starts trading lower, close it out. It's lost its vigor. Okay, so the J hooks are very obvious. Bed Bath and Beyond. Look at your Morningstar signal. This is off the 3T line. That tells you if this opens positive, you could be buying it. going into wave 3. Home was another one that was brought up in the chat room today. And the reason this one's J-hook pattern is relevant, look where it's occurring. Right here at a breakout level. So when they do a J-hook pattern, what can we assume? Wave 1 and wave 3 are going to be the same. That tells us they've broken out to this level. Isn't Tesla doing a wedge? Every time it has wedged, DJ, you could make that assumption, but I would have a safety stop below the T-line. Because logic says if it moves in that direction, you want to be out of that position. Bill, let's see. It's back. All right. CWH. Where did this J-hook pattern occur? Right there. What do you got going on? Wave 3. So this is just very simple analysis. If you see a pattern setting up and you can see where everybody else is watching, and that might be a resistance level, it just gives us that extra confidence to go after it. Look at the J-hook pattern on DXC. Where would I be buying? Probably right about in there. If it came up through that level, what do we got going on? Wave 1, wave 3. So again, this helps us with patterns, gives us much better probabilities. There's Wyoming broke out of this this fry pan bottom. Remember, a fry pan bottom is basically the buildup of investor sentiment. We're looking for when it breaks out. You can see what happened in PCAR. They had some sort of announcement today. So what do we expect after a breakout of a fry pan bottom? A lot more upside. Dree, let me get to the car companies. I'll answer then. And Kodak makes this one very simple. You got a fry pan bottom bouncing right off the 50, back up through the T-line. If this opens positive, what's our doji rule? It's going to trade positive. You want to be a buyer then because it's kind of breaking out through this level. Kirkland Furniture, look where this broke out. This is what we're expecting coming out of a fry pan bottom. Is a good strong price move. We recommended MGNI. Whoops, lots of lines. Whoops, still more lines. You can see this coming back up through this level, and it broke out. What do we got going on? We're in wave 3 of an uptrend. So if we use the patterns, ideal power, fry pan bottom, you can see there's almost even a resistance level. So what do we do on this one? If this one opens positive tomorrow, you can start buying it. And where's a logical place to put your stop that would tell you that they're still selling? Probably right here. If it opened positive and traded down through there, the profit taking is still going on. What is the strategy on a 10-minute chart for a stock that is gaps up huge at the open? If I saw this happening and I bought in here, then I flipped to my 10-minute chart, and when I saw it start selling off, look how far away you are from the T-line. I'm probably taking profits. Now, does the 10-minute chart give me anything other than it's selling off? Not really. So I flip to the 5-minute chart. 5-minute chart is doing a doji. Where would I be selling? Either here or here as it came back down through those levels. Where do you think the next target's going to be? Back to the T-line. Then you can make a decision from there of whether to get back into the position or not. So the 10-minute, this could be a 1-minute, a 5-minute, 10-minute, 30-minute, daily, weekly, or monthly. They all look exactly the same. So if I'm way up here, what's the first alert that I have? I'm way too far away from the T-line. Is this something big happening that's going to keep going? Well, if it doesn't come back through the 10-minute T-line, yeah, you just hang on to it. Mo, hold on to your individual ones until we get done with these. That's not it. BVXV. There's a fry pan bottom. Broke through the 34. Broke through this level. What's the prospects here? Probably a lot more upside. Probably here's your first target. And then there's a gap area to fill. No, Kodak, you got to remember, Kodak's not the dinosaur it was. Kodak's got capabilities, and I think one of the capabilities that Kodak has right now is that they can help produce the vaccine, or has a, do you generate a list of recommendations in the forum? Yeah. Each night I put out 2 or 3 stock recommendations. They're not so that you just have stock recommendations. They're so you can look at the 2-minute video, understand which way the market's going, and why we're recommending. And let's see, which one? I will probably be recommending SPI on positive trading tomorrow because of that fry pan bottom breakout. And we're not trying to put out recommendations just so you have something to follow. We put out recommendations so you can understand why it's being bought. And I always use the illustration of if you just tell people what to do, they don't understand why they're doing it, they're not learning anything. And I use the illustration of the cop standing on the street corner. And he sees this drunk weaving down the street, blows his whistle, pulls the guy over, walks up to the car, and he looks in the back seat, and there's a penguin sitting there. He goes, "What the heck are you doing with a penguin in your back seat?" And the drunk said, "Oh, I found him out on the street. I don't know what to do with him." And the cop said, "Well, take him to the zoo." The drunk said, "Oh, good, I didn't think of that." Next day, here comes this drunk weaving down the street. The cop blows his whistle, pulls the guy over, walks up to the car. And there's a penguin sitting in the back seat. And he said, "I thought I told you to take the penguin to the zoo." And the drunk said, "I did, and he liked it so much, today we're going to a baseball game." So if you don't understand why you're doing something, you're not going to learn anything. Each one of our videos is explaining why you want to be buying. Is a fry pan bottom more of a bottoming pattern, and the J-hook pattern is after a strong uptrend? Yes. A fry pan bottom can happen in the middle of a trend, but it's usually long enough to Shirley, send it to me, steve@candlestickforum.com, and I will forward it to him. He's gotten a little bit busier since he's had a baby girl. Anyways, the reason you use fry pan bottoms is because the probabilities are much greater that you're going to have the right direction, number one. Number two, the magnitude of the move is usually fairly strong. And number three, if the market changes on you, usually a pattern will continue to move for a little bit before the effect of a downtrend of the overall market takes effect. So it gives you a little bit more time to take your profits and come out of the position. Oh, darn. So that's what you're looking for as a fry pan bottom. When you see the pattern where it started, that's where you start looking for the enthusiasm to come in. Let's see, which one was I trying to show here? That is that one. Was it? EVXV. No. What did I just show? That's a fine howdy do. Whatever I was showing. Oh, wanted to show this as a 2+2 because look what happened right here at the breakout. You had a fry pan bottom that broke out with a kicker signal. What do we want to see on a fry pan bottom breakout? A strong price move. What's your strongest individual candlestick signal? The kicker signal. That's a very good evidence that the trend is now in progress. We also want to know what to do on a big breakout situation. This is what we're looking for. There's your fry pan bottom. This was GameStop. We had people sitting in this because of the J-hook pattern and the uptrend. Do you always get big moves like this? This is the rhetorical question. Zook, Jim will put the definition of a candlestick or a kicker signal. But kicker signals, what one was it? Dang, I can't remember which ones I was looking at. That wasn't it. This one. Kicker signals when it opens here and closes here as a dark candle. The next day they gapped it up above the previous day's open and went the opposite direction, or basically kicked it in the opposite direction. Okay, yep. So that was the kicker signal on this one that broke out of that. So what do you do when you see a big price move? That's another aspect of candlesticks that help out immensely. There was a little kicker type signal here on INGS. That would warrant going back to see what caused that big price move. What do we expect? If it had opened here and traded down, we would have gotten out of the position if we'd gotten in it. It needed to open positive. Now we have a different pattern setting up, a 45-degree. So this is information that once you understand what's happening in the investor sentiment and you know exactly what to do, there's again that kind of that breakout of wave one coming out of a fry pan bottom. There's your J-hook pattern breakout. And so a lot of people say, man, I got good profits, I'm going to take profits. That's the wrong way to sell. If you buy based upon a candlestick buy signal, you sell based upon a candlestick sell signal. That's the whole reason for using candlestick signals, is to show you when there's been a change of investor sentiment. A lot of people say you can't go broke taking a profit. You can go broke taking a profit because the whole point of investing is to get the big moves and close out the bad ones with small losses. Well, if you've got you're taking small gains and small losses, it's just like kissing your sister. You're not going to get anywhere. Another kind of fry pan bottom breakout. What do we do afterwards? Want to see that the bullish sentiment is still there. 3D, there was that big breakout. This is what we call a slow curve. Notice how it's like a little fry pan bottom, but it's already in the trend. And what do we expect coming out of a slow curve? Huge price moves. It acts like a little slingshot effect. Keith, this is all being recorded, so you can email Abraham and get the recording. That statement right now, oh, okay. Would you wait until the next day to enter after a kicker signal, or do you enter? Dimitri, it all depends on whether I see it or not. And that's the advantage of having a chat room where everybody's kind of looking for the same things. That if somebody says, oh, look at XYZ, it's gapped up. Well, if I can see it's a kicker signal, I'll probably buy it pretty quick. If I see a kicker signal at the end of the day, because I didn't see it during the day and found it in my scans, then I'll want to see bullish confirmation. I might as well improve the probabilities. So this is why you look for these breakout situations. You can see what was happening right here in this fry pan breakout area. Notice what happened here, and this is important. They couldn't close it below the T-line. That told us when they broke it out and consolidated, they weren't selling, they were still buying. And so, again, do you always get 150% moves? No, but it puts you in the situations where the probabilities of being in those moves are much greater. NNOX, you can see the wedge, and you can see that did it break out that big today? When I looked at it, it was right here. Did I see something wrong? Let me see. It did move big. I watched it earlier, and somebody said, should we be buying? When did that start moving? We can find out. That's the 1 minute chart. I'm not going to learn anything from that. Well, I guess it moved late in the day. Yeah, so there was your wedge. And this is the advantage, again, we have is seeing the, well, that's not what I want. Seeing a formation that everybody else is watching. So when it broke out through here, when I looked at it, it was only right here, and I was telling people, wait to get more confirmation. Well, I guess it did without me. Oh, I've got a star next to this one. There's your breakout with a kicker signal off the 50. So what do you think is going to happen here? If this is your strongest reversal signal, and it bounced off the 50 that everybody's watching, and it's right here at this level, if it opens positive, what do you think is happening? The strength of this is taking you up into another strong price move. Maybe this was the one I was looking at. Okay. This one had kind of a wedge formation. People saying, should we be buying? I kept saying, all right, buy on strength. I would be a buyer of this one tomorrow because it would look like it's breaking out through that wedge formation. That was what kind of happened over here. When it broke out off the 50, this is what we would call a power trade, where you have a pattern, you've got the buy signals, you've got the breakout out, and you can see where everybody else was buying off the 50. It just puts you in the right place at the right time. Opening positive is that the stock is opening flat or positive, but the market isn't opening up, the Dow's not opening up down 200 points. The Dow's still trading flat or slightly positive, and this is trading positive, confirming your buy signal. That's what I call a positive open. Let me see what we got going on here. I had a bunch of them here. That's why this is taking so much longer. Look at your bullish flutter kicker. Notice you had a down candle. The next day they opened it right about the same level, but they did a doji. And what's our doji rule? They're going to move it in the direction of how they open it after a doji. If they open it positive, what's it telling you? They're going to trade it positive. This is what we call a bullish flutter kicker signal. Remember what the strongest signal is? It's a kicker signal. Well, if you took out this little flutter, you have that bullish kicker signal. No, not necessarily take out the high of the previous bar, just opening positive. But you want to see the bulls are still in control. LXRX, there's that big breakout, kind of your best friend breakout. So you go back and say, all right, what was the news that caused this? And then what do we expect? We expect a 45 degree. I wouldn't have bought it here. If I was long here, I'd stay long. If I was looking to buy, I wouldn't have bought it here. But what do we want to see after that consolidation? The buyer stepping back in, telling us the consolidation's over. What do we expect after a big breakout move? A 45 degree. Do you buy first 15 minutes of trading session, or do you allow the market to settle? I usually buy if I can see the market's opening positive, moving in the direction that we anticipated the market moving in a trend, and the stock that I was thinking about buying is opening positive. I'll give it maybe 90 seconds to be buying. If the market, then we can do entry strategies. If the market opens lower and the stock opens positive, we wait to see if the market's going to come back up or if the stock continues up. If the market opens higher and the stock we're looking at opens lower, we don't jump in. But if it starts trading positive back up through the open of the close of the previous day, that tells us the bulls are still there, then we can be buying. Or if the market opens lower and your stock that you're looking at opens lower, you don't do anything. That means they're not buying that day. Just everything that you see in candlestick analysis is just pure common sense. What if it reverses? George, you're buying something that is on the basis that the probabilities are pretty strong. And I say pretty strong. Usually I know that probably 70% of my trades are going to trade positive. Some of them are going to trade 3% or 0.3% positive. Others are going to move up 300%. That means I've got 30% of my trades that might not work, which is as important to know when to get back out of those trades very quickly so you can take those funds to go find another trade that has a 70% probability of moving up. So part of it, or a major part of investing successfully, is if you buy a position and it's not working, you close it out immediately, move on to the next one. Getting out without a significant loss on those breakouts is hard. Not as hard as you think. What was trying to think of which one. I don't remember any big breakouts today. On a day like this, do you buy here? Do you buy here? Do you buy here? When do you get out? That's where you go to your 10-minute chart. Let's see if I can. And if this is your 10-minute chart, you could be buying here, maybe not buying here. You're waiting to see if it holds up. But you could be buying here, may not be buying here. Where would you might start taking profits? Well, there's your little wedge, and it started breaking down here. That might be where you start coming out of the position. So remember, if you've got a big price move, that's where you can flip to your 10-minute chart and get a much better feel for which way things are going. We did the oils. Oh, can you still buy EP or EXPV? That's a 10-minute chart. You can see the pattern. It's a fry pan bottom. It's supported off the 50. If this opened positive, yeah, I wouldn't be afraid to be buying with the expectation they're eventually coming back up to this area. Now, how long do you hold it? You hold it as long as it stays above the T line. Solo looks like it's doing a Morningstar type signal, and observe the obvious. This is why the visuals of candlesticks make trading so much easier. Look how it's supported off the 50. If this opens positive, this whole pattern is trading positive. All right, just a couple more. This is what we call a message. It gapped way up. That's where you would have gone to your 10-minute chart if you happen to have been long. But it came back down. So what's the message here? Doesn't look good, but the message was they gapped this up. People were trying to get into this with great enthusiasm, and there was profit taking. So what do we look for after that? We look for the profit taking to end, and then get ready to start buying when the buying comes back in, because that right there was the message that told us people were trying to get back in. Len, use this link right there. Again, everything you see in candlestick analysis is just common sense put into a graphic depiction. When I was learning candlesticks, there were so many times I would say, yeah, I knew that. I knew that. I just didn't see it in a graphic. So that's a message right there. They gap it up, new interest, profit taking over. That's the day you could start buying. Open positive means above today's high, or just somewhere above the close of the previous day, and that the market's not falling out of bed. Now, if I saw something, and I'm trying to think of what to illustrate. This was the 2 plus 2. Trying to find something right here. Let's say I saw this, and it was doji buy confirmation, closed just above the T line. Could open positive the next day. Maybe I'll sit and watch it 15, 20, 40, 90 seconds. If it's still trading positive, I'll start stepping in. What I don't want to see is I buy something and it immediately starts trading off. I would rather be 20, 30 cents late, knowing that everything was going in the right direction. I noticed the T line seems to cross over the 50 MA, then the stock takes up. No, surely not really. We're not buying the moving averages. That just happens to be happenstance. That's on this one. That's where that occurred. Okay, I think I've probably given you enough info to keep you tossing and turning all night. Did I do this one? Sun. Yeah, okay. So is there any general questions on candlesticks? All right, we'll do stocks. When I tell Jim to do the double line, everybody just kind of do one because we're way past bedtime. All right, Jim, go ahead and do the double line. WWR, we will be buying this one because of the breakout if it opens positive tomorrow and starts trading positive. Jim, in 2.6 seconds, do the next double line. Whoa, man, I didn't keep up. AMD is a nothing chart. There's just nothing there to get real excited about. If you like it, nah, can't even, yeah. It's nothing. I'd be someplace else. Just no direction and no signals. Now, FSLI, that one you can stay long, or you could even be a buyer above today's high. That would tell you they're breaking out into the next wave. giving you a J-hook pattern setup. AMDP, this one you can be buying on positive trading. If I was buying on positive trading tomorrow, want to see it going in this direction, I'd have a safety stop at today's open. Gap up to 244. So there was another case, too, that I don't know whether I can, that I would have gone to the 10-minute chart to see if they were starting to take profits. Anytime you see something up huge, way far away from the T-line, what do you think some of the traders are going to do? They're going to start taking profits. You just want to be able to see much more quickly when that profit taking starts. Dana, all you can do right now on this one is stay long in this slow, steady uptrend. And Jets, nothing exciting here. The only thing you got going for you is that it touched the 50. You could be a buyer, but you want to see something strong. Pretty much telling you wave 1, wave 2, kind of a fry pan bottom. You could be buying on strength because of the fact that they finally touched the T-line. XPEV, we did. This also appears to be an all-electric car-related sector stock. Yes, it is. It's in our, yeah, it's one of the ones that we've been trading. Right now, we're long, and we stay long as it stays above the T-line. ADP, or APT, that's a kind of a trend kicker. I think that's a red candle. Breakout, I would watch to see what happens when it gets to the 200. AACQ, never saw that one. But that's a little J-hook kicker type signal. You can stay long on this one. CMRX, that's a J-hook pattern. I would probably use today's low as a stop. If it came back down through there, it's telling you they didn't break out. I would be a buyer if they come back up through today's open. And Borg Warner, that broke out through this level. You stay long till you see a sell signal. Jemiah, nothing here great. If you're long, you can stay long. I wouldn't be a buyer, though. Let's get away from that thing that's driving you to drink. I wouldn't be a buyer until it gets back up through that level. Rio and ADR, they're harder to trade because of the choppiness, trading elsewhere. I would be a buyer if it broke this downtrend, so you could buy this on positive trading. I'm hoping to see a little J-hook setup to enter a buy trade after a bearish left-right combo sort of today. Yeah, you wouldn't call that a bearish left-right combo. That's just kind of the normal trading day. And it's not at the a top or a bottom of the trend. Fuzz. You can be buying, but expecting a 45 degree, so I'd be buying on strength. I'd want to be buying it on positive trading tomorrow. I don't know if I can get the warrants over here. No. SPWR. We're just staying long. TRHC. Now that one's running into trouble. It has to open positive and trade positive to stay with it. If it opens lower, I'd close out the position. Kendai is really not doing anything right now, but we keep it on our watch list. It's one of the electric car makers, but it's got kind of a little dark cloud over its head because of their bad accounting. But that doesn't make any difference if they're buying. So right now, would not be long or short, but would be a buyer if it comes back up through the 50, giving you a bobble breakout. Nail broke out of this level. You stay long. Getting up in the overbought area. Right now, it just stay long. Space started slowly back up to again today, doing kind of a little J-hook pattern. You could buy on positive trading, but I'd have a safety stop probably at today's low, because if it came back down through there, it's not going anywhere. Alex did close below the T-line. If you didn't close it out today, it has to open positive and trade positive to stay in it. If it opens lower, close it out. I think S-Fly, I think they were bought out a long time ago. If you're thinking of F-Sly, that one's the one that you can buy if it breaks out into new high territory. D-Dog, nothing there. You're kind of stuck in a wedge. I probably wouldn't be long or short this one right now. Just no direction to it. It's not a good looking chart. FedEx, that one you can get ready to buy on positive trading with the expectation coming back up to test the 50-day moving average. Yeah, I wouldn't call it a fry pan bottom. I just call it kind of a bottoming action. Stochastic's coming up. You're above the T-line. Let's make this big enough where we can see it. I wouldn't be afraid to buy it, but then you watch to see what happens at your first major resistance level. KFY, slow uptrend, nothing exciting. You just stay long as it stays above the T-line. That's about all you can say for something like that. AMWL. This one doesn't look great. Because of the bearish left-right combo, if it opened lower tomorrow, I'd probably close it out because it's telling you they're stuck sideways. And anytime I see something iffy, somebody was asking yesterday why would I close out, I closed out Clean Energy. Maybe it was today that I did, because it wasn't going anywhere. And there was too many charts that looked like this. So if I've got something where I don't know whether it's going this way, or this way, close it out, because the whole point of using candlestick charts is to identify setups that are going to give you high probability trade results. Is it common that after a breakout, then next day, red bar, then it rockets up with a doji sandwich? It's more just profit taking. There's going to be traders that are taking profits. You might see it come down. And as long as it comes back up toward the top end of the trading range, you're all right. Gilt did the same thing where they did some profit taking. But what do we expect after a kicker type breakout? At 45 degree. And LNW. Not a great chart, but it's kind of broken out through here. You can buy it on positive trading. It's just not a great chart. You need to see more strength, preferably get back up out of that range. And PLL, one of the lithium miners, all you can do here is stay long. At this point, I'd probably use today's open as a stop. If it came back down through there, that tells you the bears are starting to show their effect. And Netflix did some profit taking, but if it trades positive, another one, you could expect a 45 degree continuing the uptrend. AMD made 3.6 thousand in today, sold after hours, after a strong up move. We'll buy on weakness in the morning. Did it make a move after hours? Is it trading right there? It's still not a great looking chart. I mean, that to me is just not a tradable chart. That one you could buy because it's got kind of a trend kicker signal. Opened here, closed here, gapped up and went the opposite direction. Just need to get through these moving averages. So you could buy it on the basis that you might be looking at a kind of a trend channel with the next target up here, which isn't a real significant percentage move. I guess it's all right. AUPH, you could be buying this one. It's still not a great looking chart either, but now that it's up above the 200, definitely want to stay long. And net, if you're long, you stay long. You're still watching to see if they can get through this level. There was profit taking. This is what we call a meeting line. Notice it opened here, closed here. Gapped up and closed right back where it opened. That's called a meeting line. That's a bearish signal. If I was long, it better trade positive tomorrow. I'd probably use today's open as my stop. If it came down through there, they're heading back to test the T-line. Intel, I think they reported they were all right. I thought they were trading right about in here after hours. Intel's a toughie to trade because it's not wildly exciting because it's a institutional trader. Charlie, I think we've got, did you get the link? Try that. Should be at the bottom of the page. YQ, that's what normally happens. Now, if this opens lower tomorrow and you were long, you close it out. If it opens positive, I'd be a buyer if it came back up through this level, telling me the 45 degree is in progress. And GRTS, that's what you want to see. Look where they opened it. If I was long and it opened here, I'd have gotten ready to take profits. But the fact that we could immediately see they were trading positive told me now we have a 45 degree. Starbucks usually is not a great trader. Just not a real good dynamic chart. Probably would not be long or short. SPRWF is a cannabis. All right. It probably 5 letters usually doesn't come up on this system. Salesforce, you stay long on this after the gap up. You use the T-line as your stop. Fuel cell, stay long as it stays above the, closes above the T-line. TAN, I think we did YQ, didn't we? TAN, that's a nice J hook. You can go long on that one. YQ we did, all right. Okay. Last few. Right now, I wouldn't be long or short. You can see you're kind of in a sideways on SBE. Apple, I'd be more apt to be trading this long after the bullish signal off the 34 gap up. You're looking for it to break out through this level. And PayPal, just stay long. Nothing wrong there. Let's see. This, Pure Storage. Not anything exciting here. You can see, even though they brought it up, it's very indecisive. Pearl wouldn't even pay attention to it until it breaks out. What the heck is that up there? Until it breaks out through this level. Melly, that's a bearish engulfing signal. I would put a stop loss at today's low. To stay in it, it better open positive and trade positive. If it opens there, it's pulling back at least to test the T-line. GOED, LG, I think there's probably, yeah, if once you get in, we'll make sure everybody gets in for 2 weeks. GOED, you can see every time they try to take it up, they knock it down. To stay in this one, it has to open positive tomorrow. They did the same thing over here and then took it up. So right now, as long as it stays above the T-line or closes above the T-line, you can stay in it. UPST, just stay long as it stays above the T-line. That's not really a J-hook, no. A J-hook, it's a J-hook type thing, but it's more telling you you're essentially staying above the T-line. And BP, that's more of a J-hook. So they pull back and take it back up. Another one that I'd be apt to be buying it if it comes up through this level, telling you wave 3 is in progress. Yes, so if they continue to open positive, again, the T-line rule says it's probably going to move positive. Genius, nothing wildly exciting here. Now, you did do a little bullish signal off the 50, but you're still in junky area. You definitely want to see some positive trading from here. Oh, Procter & Gamble, that's another quintessential institutional trader, except you did an inverted hammer right off the 200 in the oversold area, which tells you that if it opens positive, the inverted hammer is one of the 12 major signals, and if it opens positive, the probabilities are 95% or greater that it's going to start back up. Rimini, stay long. You're in the overbought area, so your safety stop is just below today's low. XNet, that's not a good looking chart. That was a killer. I'd be someplace else. Let's see, what is it? ALLF? AL, whoops. That's probably not going to come up. ALLIF. No, that's not going to come up on the system. Oh, was Procter & Gamble a blue ice failure? Yeah, where it fell through the ice, they came up, they failed, couldn't find the hole they fell through, went to the bottom of the pond. All right, everybody, still lots of good-looking charts out there. I'll have to go back through them, but I'm pretty sure we're going to be buying this one. And this one should have a good classic J-hook pattern setup. All right, everybody. Have a good evening. We will see you bright and early in the chat rooms tomorrow. We'll see you then.